Hello from Automotive Markets. This is Ahura will be with you to review the European PMI data and market reaction. As you know, today we had a very important data from Europe, not just the Eurozone, from all Europe and Eurozone and UK. The PMI numbers, first, let's say why the PMI numbers are very important. You know, the purchasing managers, they have very important rules in all the companies, not just the manufacturing, the service sector as well. They answer just like in any sector, for example, in manufacturing or the service sector, the index is selecting more than 50 companies, and then they ask some questions from the purchasing manager index, and they answer this question with the three they reply this question with three answer: yes, no, negative, positive, and natural. And with these negative, positive, and natural answers, this index is calculating, and that's what very important. So that shows that overall the economic direction and where this economy is going, and what's the outlook for this economy further in the next steps. As you can see here, we started today with the first PMI numbers. In the manufacturing sector, it increased from 45 to 45.5, but the service sector fell from 48.2 to 44.5. That's why the composite number fell sharply from 47.6 to 44.5. Then later in Germany, we had almost the same pattern. The service sector in Germany fell from 52.5 to 52.2, slightly lower. In the manufacturing sector, from 45 increased to 46.1. But the composite sector from 50.5 increased to 51. A slightly increase, that's mostly because of the manufacturing sector, which increased from 45 to 46.1. But if you look at these numbers, both in Germany and in France, while the manufacturing sector increased slightly, but still, it's less than it's under 50 expansions area, which means that the manufacturing sector is still under pressure. Later, if you go further and check the Eurozone data as a whole, Eurozone, we can see that the service PMI fell slightly from 50.6 to 50.5, and the manufacturing sector increased slightly from 46.6 to 47.3. That's why the composite sector, the composite PMI, was stable at 50.2. That means generally, if you look at the Eurozone economic pattern, we can see that the economy is not so good, but it is trying to be stabilized around the current situation, and the manufacturing sector is still under pressure, even though it increased slightly from the previous month. Out of the Eurozone in the UK, the pattern is repeated. Manufacturing sector still under pressure, even taught from 48.3 to 46.4, but the service sector increased from 50.8 to 51.1. That's why the composites PMI almost was stable at around at 50.5. 50.6 falls slightly to 50.5, which is like not such a big fall. But generally, what we can see here that we can say that so with what's going on here, we can say that in UK also, same as in the Eurozone, the condition is almost the same. We can say that okay, the manufacturing sector is slightly weaker than generally the service sector, but still the overall economy is trying to be stabilized and go further. So this composite PMI in UK stay around about 50. Composite PMI in Eurozone also stays stable about 50 expansion zero at 50.2. With these data, and at the same time, on the geopolitical front, we know that there is a peace talk between Russia and Ukraine, which is going on by the support of the U.S. Here we go. While the United States actually, in fact, there's the peace talk between Russia and United States, but generally, whatever it happened, even thought this from this peace talk, the European countries, as they are somehow out of the game, but the reaction, but the result could be positive for them because the peace talk, it's generally the peace brings them, it support the economy to increase. With this condition, when we can say that the overall economic activity is weak for Eurozone, it's not, it's stays trying to be stable, but in the weaker area. As you know, as mentioned earlier, manufacturing PMI is still under 50 expansions area. So this negative, this data generally they are weak, they are generally showing the weak economic data in the Eurozone. So that's why it put under pressure. The euro, it put the euro under pressure. So the euro right after these data is under pressure, we can say that the euro is falling, euro US is falling. But at the same time, on the other hand, since these data means that the economy is under pressure and European Central Bank had no choice than continue to cut the rates, that's somehow the positive news for European stock market. But so in the short term, in the short term, it can be positive for Eurozone, but in the long term, the reason of supportive economy, supportive policies in the central bank is weaker economy. So the reason of uptrend, the reason of positive reaction in the stock market is a negative reason. So that's why we cannot count on this trend. So in the midterm, in the long term, that can be the negative for a stock market. Even thought in the short term, it has a positive reaction, but for the euro, it is generally negative. As for the UK, if you look for the GBP USD, the pound also had almost same reaction. The pound with the almost weaker than expected economic activities is got weaker against US dollar. Yesterday we had inflation numbers from the UK, which showed the inflation is increased more than expected. That's why it supported the pound against its rivals, but generally with this data now, it's somehow reversing that gain of yesterday because this data shows that the economic activity is weak. So economic activity is weak, economy is weak, which is the negative for the currency. At the same time, that data shows that the UK Central Bank or BOE can stay again, can continue the dovish policies and cut the risk. That's why it's generally the negative for pound, not in just short term, in short and midterm, it's a negative for the pound. But as for short term, it's positive for the stock market since these data means that the dovish policies should be considered as a next step or next decisions. That's why it can be supportive for the stock market. But same for the Eurozone. The reason of this positive reaction is a negative economic data. That's why we can say that these numbers, they are negative for the stock markets in the mid and longer term. As for other markets, negative economic activity is not something good for the energy market. That's why these data, they are generally negative for oil market. But as we look at the other markets, for example, in the gold, we can say these numbers, these numbers could be positive for the gold because weaker economic activity increased the risk in the market and demand for safe havens, including the gold. Same for the US dollar. These data could be positive for US dollar as the weaker economic activity in the Eurozone and in the UK can carry trades towards the UK, towards United States and move the cash to United States and increase the demand for US dollar. That's why that could be positive for US dollar index, same for gold. That was the general market data and reaction. If you had any other question, don't forget to write down in the comment section or try to get back to you as soon as I can. Have a good time. Bye-bye.